Microenterprises have reported weak operations during the COVID-19 crisis so far, says the Social Enterprise Development Partnerships, Inc., or SEDPI. With us now for more is Vincent Rapisura, President of Social Enterprise Development Partnerships, or SEDPI, a private organization that has reached 3,000 development organizations. Good to see you, Vince. Welcome to the program.
Hi, Kathy. Good morning to you and to our viewers.
I know that you've been busy with your community assessment research among the SEDPI members as the COVID-19 crisis impacts microenterprises. What have we found so far?
Yes, so we did our weekly rapid community assessment research since the onset of the lockdown on March 15. And what we found out immediately after was that 34% of our microenterprises stopped their livelihoods. And this increased to 51% after 2 weeks. And when we received our research results yesterday, this improved to 43%. So from 51%, only 43% now closed their livelihoods because they're forced to go back to business. They no longer have money and they need the budget to buy rice. Some of them are using locally sourced materials to be able to go back to business. 57% weakened their reported weakened livelihoods. And of this, 42% said that they were severely affected by the ECQ and 48% significant weakening. And the reasons behind the stopping and weakening of these livelihoods, as we found out, are the following. They're not allowed to open their businesses because their businesses are considered non-essentials. They experience supply chain disruption and they have inability to deliver goods and services to their clientele. Most barangays also prohibit them from entering. Non-residents are prohibited from entering barangays, and so others can't go to work because of this. They also experience very few buyers of goods and services due to the closures of businesses and schools.
It's very interesting that you made a mention of improvement from over 50% closure to just over 40%. What accounted for that? Was it, what sort of money and funding did they get to enable them to open their businesses again?
Yes. So what they said was that they were forced to open because they need to earn income to be able to buy rice. Not even to buy their daily needs, but just to buy rice. And the way that they did that was they sourced locally produced materials to be able to sell a little bit of food, like say, for example, banana Q, kamote Q, or suman, that they could sell to their neighbors to be able to earn money. So, and what we also found out...
So this doesn't even include the cash aid? I just want to put this into context. The status of the SEDPI members who qualify for the government's cash aid, have they gotten, have all of them received their share of the Bayanihan Fund?
No, Kathy. In fact, only 89% of our members have not received cash assistance from the government. And I would say that all of our members are qualified, or most of our members are qualified to get this as cash assistance from the government. But only about 11% of them got the cash assistance, and only 55% of them got relief goods from the government. And as we did our community assessment, we only saw marginal improvement from the government assistance because last week when we did the research, 90% reported that they did not get assistance, cash assistance, and it improved to 89% this week. And 43% reported that they did not receive relief goods, but this improved to 55%. So there's marginal improvement in terms of accessing government assistance.
Still, you'd want to get to 100% and capture everybody in need of cash and food assistance. So what sort of recommendations would you give the government? I was just speaking earlier to Finance Assistant Secretary Tony Lambino, and he made a mention of the listahanan, as well as the lists of government agencies as a viable alternative to the lack of a national ID system.
Yes, I think there's also a very good recommendation for government to work closely with microfinance institutions in terms of generating this list, because microfinance institutions are very well penetrated in the local communities, whether that is urban or rural areas. And we serve micro enterprises, the informal sector, who are typically would qualify with who are typically poor, no, would be considered as poor. So what we are recommending the government to do is to intensify the relief operations and providing of cash assistance so that we alleviate the burden of the informal sector.
Now, I'm aware that you published a position paper about a week ago stating the implementing rules for microenterprises conflicts with the Bayanihan law under RA 11469. How so?
Yes.
And have you received feedback from the government since?
Yes, we haven't received any formal feedback from the government yet, but Ateneo and SEDPI actually came up with a position paper stating that the Republic Act that the IRR for the Republic Act section 4-AA should be maintained, that interest accrual for loans should not be accrued during the time of ECQ, because what we're saying is that all of us are affected during this ECQ and nobody was spared. So if interest are going to be continued to be charged, the informal sector, the micro enterprises and small businesses will bear this cost. And they will bear this cost, and those who will benefit are those, again, who are at the upper echelons of society. So what we're saying is that to have a level playing field, and this is, I think, a very good opportunity for the government to level the playing field in terms of charging the interest to informal sector and micro enterprises.
And just one final point, why should the government infuse capital in the form of equity to microfinance institutions and not go for the debt-based development assistance?
Yes, because we believe that microfinance institutions typically get their funding from commercial banks and government financial institutions. And we are anticipating that microfinance institutions will have a hard time collecting debt repayments from our microenterprise clients because of COVID-19 and the lockdown. And in our study, if the repayment rate of microfinance institutions would go down to 85%, they would only have about 6 months of free cash flow that will keep them alive. And that's how microfinance operations work. And we're anticipating that with this COVID-19 lockdown, the repayment rate would go as low as 50%, 40% from previous records. And that would greatly affect our cash flow. So instead of having the microfinance institutions forcing them to repay loans from the government, especially from government financial institutions and commercial banks, this could be converted into equity into the microfinance institutions, very similar to the bailout strategy that happened to large insurance companies and banks during the global financial crisis. And then once the microfinance institutions will recover, say after 4 or 5 years, then it could effectively pay back this equity to the commercial banks and the government financial institutions.
All right. Well, thank you for keeping our ears to the ground on what's really going on among the microfinance institutions. Much appreciate the time, and keep well, Vince. Vince Rapisura, the president of SEDPI.